we're going to show this Dow chart. It's a weekly Dow Jones Industrial Average, and behind here is a monthly Dow Jones Industrial Average. And we closed 300 points down at 10,992.13 on the Dow. Now, having to update the MMTs is what is going to happen is when you look at this monthly chart, these are monthly moving averages, a 100-month and a 40-month. Now, we bounced the previous month, kind of like the S&P and all the other indexes had done at that first pass. Here, for the first time on a monthly level, as far as the monthly level goes, is we're closing below the 20-month moving average. What's the value of the 20-month moving average? Well, let's just tell you that the value of the 20-month moving average is 11,302.6. Basically, we are that, so that's the monthly moving average, 11.3. Now, let's do the math. 10,992.13. We're roughly about 306 points below the 10-month moving average. And notice that the downside, selling below that, you can see that we were down 303.68 handles on Friday in the Dow. And what does it mean? It means that the more wider, the longer the value, meaning that the more points below the 20-month moving average is, that there's weakness being built here at the short-term support level on this monthly now. And you don't want to go lower than 310 handles. So ultimately the upside volatility is going to be resistance now at that 20-month moving average, MMTs. And until that monthly moving average closes back above there and comes back up here to this 10-month moving average where the Dow caved in, when it sold through there, we were there, and that was at 12,078 or so. Let's take a look and see what it was, the 10-month. 10-month moving average, which is right here in this column, we can take a look here what that monthly was. At the time it was 12,057. You can tell that we are below that 10-month moving average, dropped to 12,055.9. And my teaching to you, MMTs, is that the further that we fall below them, the weaker that the broader Dow index is going to be. If we sell below this 50-month and the 100-month, they're intersecting each other right now. They're at a crossroad. But I can tell you it can get nasty for the Dow when the 40-month is crossing over the 100-month, as it's starting to do. They're right here, these two lines. And so this support level right here was tested fine enough. But I can tell you now, MMTs, if we sell through here, the put side of the market's going to make a huge advance again, and the bear ETFs are going to go higher across the board. And this whole move is at jeopardy. The other thing that you need to know is that the monthly high could not get above the previous month's low. It did not. It came up, it tested it, and bam, we're down here now. And so when you look at things on a shorter macro term with the weekly chart here, here's a weekly. Let's put it in here. When I show you this weekly chart, is one of the things that's very disturbing naturally on a weekly, because it runs quicker. It's based on 5 days, of course. However, you're declining the 10-week over that 50-week. This is that pink line. That's a 50-week. And the 20 is coming near it. And when they cross over and we're starting to sell through this 100-week, this is your major bottom on a weekly level right here. And it's at extreme jeopardy, because if you take a look at the 100-week moving average, it's right here on the Dow. It's 11,117.2. and we're closing below that 100-week. That means that this trend line is a 1, 2, 3, 4 week. We come right up here and tested exactly where we said it would go. And it came right up there. And it tested this major area up here on these highs. That was your major support levels now. Back here in 2001. That was the first 4-week contraction. Okay? And we're sitting right here as resistance. Meaning that, bam, kiss goodbye. Now we have another one to look at right here. And we'll draw a trend line. Now remember, this is standard technical analysis that the bigger people look at because they don't have any other data set of tools. They don't have a platform like you. But the 200-week has been declining. That means that any up move is very, very weak on the Dow. However, this is the first pass of the first lows that we put in. And we're going on week number 5 of this low that hit that 200-week on the Dow. And we're selling back down toward this low. If we break below here, that's going to be the lower support level. Right here, that's that 200-week. That's going to be slightly, let's just do this last low. Is if we come down and we sell through there, then I'm sorry, the Dow can go a lot lower from that point. And basically, we start getting over here in the 2010 lows. And we start, if we break these support levels, well then naturally when you're looking at this, these are going to be some key areas of support. 10.5 is one. There's another one, and I'm just drawing them freehand just so you can see what's in between here. But these would be the little support lines that would come down and act as a buffer as it did here. However, in the shorter time frame on the weekly, we are oversold. And we're getting to key levels down here where we are oversold. I'm going to just tell you. And we're minus 210 on that blue bar. And the more negative it gets, the bigger it gets, then the more support, the more that the Dow gets oversold, the stronger that these lower end support levels would be as well at these bottoms here. Because in the short term now, we are due for a bounce. But you can stay oversold for weeks over end as well. Just like you can stay overbought. Look at here. Look at all the weeks that the market stayed up here at the ceiling. At different highs. It pulled back and then we stayed overbought. But look at when this started to fall rapidly, you got that 7-week correction. Hell, it kept going down where it created this big weekly sell signal here. And so therefore people were unloading the stocks. We'll be watching where that Dow hits a knife hook bottom. If it does come down and test that line, we would be looking for the daily intraday bars to all be green. And that put a bottom in, that put in that top resistance to sell it, and there's the test of it. And we're short-term oversold. However, the monthly is at jeopardy, and it's what that sell through in these stop market is just like below the red line. That's the 20-month. Now, we're going to see how we respond in the next 5 days at these moving averages. But if the body sells through it, this last monthly low right here is at extreme vulnerability at 10,000. Let's just call it somewhere around 10,620, 30, or whatever it is. But if the body does sell through there, this low that we put in where all the buyers came in, and we're looking for this kind of thing to happen again. However, it's going to become very vulnerable on the Dow. That's going to conclude the fact that we are in a major turning point on this monthly. And if we don't act as support here, well, we come down and we start selling through here and selling below these monthly moving averages. That means that the Dow, yes, it would be oversold even more. But the weakness in the Dow is still there. And you would be around the corner, we would be looking for a reversal pop. That is, if you can get anything good out of Europe. And what Europe does in their financial crisis is over there. And the wall of worry would have to be eliminated from the market, meaning the uncertainty wouldn't be so uncertain anymore. And then we would see how the markets want to trade and respond to these monthly moving averages with some headline news coming out to try to help this support level on the Dow. Remains very weak, MMTs, and if we break through it, bear funds are going to be the one we'll be trading to the upside, because that's the way the market will be printing. The bear will be going higher. We'd be shorting down bulls. When you break these key support levels, we're 300 handles below the 20-month to here. Now we see what happens here next week. That's the technicals. They're very, very weak.